How's it going, everybody? Estas here. So we had another ugly day in the stock market today. Even though we had a pretty good beat on the CPI number, the market didn't give a crap. We had the S&P down 0.6%, the NASDAQ 100 down 0.3%, the Dow down 0.8%, and the Russell slid the most, down almost 1.4%. So today, we're going to break down some charts, some stocks, my thoughts on the market. So sit back, relax, smash that like button if you guys find value. Make sure to subscribe to the channel as well, and check out my Patreon down below, and let's get right into the video. So based here on the 10-day 30-minute chart, you guys can see the S&P 500 based on SPY, which tracks the S&P 500. It's an ETF that does that. This ended up taking out the lows from yesterday, and that's kind of been the moral of the story as of late. I believe today was maybe the 7th straight red day that we've seen. 1, 2, 3, 4, 5, 6, maybe 6 or 7. I'm losing count at this point. And every time that we've seen these days, the past 6, 7 days, red days, we've taken out the previous day's lows, right? Today we hit a low of $443.22. The low from yesterday was roughly 444.1. The low from the previous day was 445.30. You guys get the point, right? We're making lower lows, lower highs, and we've been downtrending the past couple of days. That's on SPY, and it's pretty much the same thing on QQQ. You can see we almost got under the low from yesterday, but not quite there. But I wouldn't consider that a win, considering the fact that we hit a lower high under that 180 SMA at about 378. We double topped there pretty much, and we saw a big dump off at the close of the market. And by the looks of it, guys, it's hanging on by a thread at that low from yesterday, and I think we're going to take it out and probably go a bit lower. So the moral of the story is we're seeing red, and I think there could be more red in these markets, and you can clearly see that here on the 10-day 30-minute chart. And if I pull up the 4-hour chart, now QQQ is right by that 180 moving average, which it's held in the past, so maybe we get some buyers there. But ultimately, the smaller time frames look pretty dang ugly, which again is why I think we could see more downside until the technicals prove us otherwise. And on the 4-hour chart for SPY, which again tracks the S&P, this one's well under both moving averages now. And you know, we took the lows out like we discussed, so this could see more red again until the technicals prove us otherwise. And make sure to subscribe, because we talk about this stuff every single day. And if you guys subscribe or sign up to my Patreon, which again is linked down below, we make a video every morning discussing the markets, the futures, the game plan, stocks that I'm looking at that upcoming day. And of course, I'm posting all my moves there, so check it out, link down below. And the funny thing is, guys, we got CPI data, which was better than expected. I believe let me see here in my notes, the economists in a Bloomberg survey called for a 0.4% increase in the overall CPI from the prior month, and a 5.3% gain from a year earlier based on the median estimates. And the CPI actually came in at an increase of 0.3% in July, and that was the smallest advance in 7 months, according to the Labor Department data that was released this morning. And the transitory inflation people, they're probably out screaming, hands in the air, yes, yes, we told you so, no more inflation, inflation is dying off. But I'm not buying it. I'm not one of those people, and I've been vocal about that. I think inflation is honestly a lot worse than what people think, because the CPI data, excuse me, guys, it doesn't track everything, you know, and there's a lot that's not in the CPI data, which we can go on and on about that. We've talked about that many times, but it's kind of a misrepresentation in my personal opinion. And if you guys remember, we saw, I think, 0.5% increase in July, 0.9% in June. June's number was horrible. So, yes, we have decelerated a bit the past 2 months, but it's still high, the inflation, guys, based on the CPI and the real inflation out there. It's running rampant at this point. And initially, we got a pop in the markets. You can see here, 8:30, once that number came out here on the East Coast, we rallied from 446 to 448.50, but obviously we saw a massive dump off the rest of the day. And the way I'm looking at this, guys, is I'm just averaging into my VOO position, which is my S&P 500 ETF that I buy for the very long term here. And that's kind of the way I've been looking at this. And I'm buying fractional shares, I'm buying nibbles here and there, and that's what I've been doing. It's not like now that we're not crashing. I don't want to say that, but now that we're dropping off, it's not like, oh, I'm not investing anymore. Now is the time to add more to your positions, if that makes any sense. And I'm not telling you what to buy, when to buy, where to buy. I'm not doing any of that. I'm just telling you all what I'm doing. You know, I've been buying more VOO, averaging into that more, which I've been buying for a while at this point, and I've been doing covered calls, selling covered calls on some positions, making some money there, and I've been laying low a bit on the trading. Not crazy, no crazy activity yet in my accounts, guys, as of late. Other than selling calls. I actually did buy some win today. If you guys saw that's one thing I did today. If you guys saw my video earlier, we talked about how win was getting slammed. LVS is getting slammed. So I did pick up a little position in win, a starter position at $91, and I'm going to see where that ends up going, and I'll make update videos on win. Maybe we'll dive deeper into why, that stock is tanking today, and it might go down even more. Who the heck knows? So let's go over some other stocks that I'm personally looking at right now. FCEL Fuel Cell ended up ripping today, up 15%, and it was one of the only green stocks that I was looking at. And they reported earnings, I believe, was it pre-market today? I completely missed it, honestly, guys. I forgot to look at their earnings, but I did notice that it was a big mover. It went from 560, that's crazy, 560 in the pre-market, and it went all the way to 754. That's a move of 25%. So you better believe they did pretty well with earnings. So let's pop it up here. -4 cents, beat the -5 cent estimate, and sales crushed it. There you go. Sales came in at $26.8 million versus $20.69 million. So they destroyed earnings in terms of EPS, or rather revenue. EPS was a slight beat, which that's good as well. And now we're trying to break out of this downtrend, which has been a downtrend for the past 7 months, ever since the beginning, more towards the middle of February. So maybe this is the catalyst that starts driving FCEL out of this downtrend, but it might not be. So keep that in mind. And for me, full disclosure, I don't own FCEL. I don't plan on buying it until we start breaching above the highs. I'd say at least from the beginning of August, $7.90, $8. I want to see it get out of there, and we'll monitor it. I don't know why I said it like that. We'll see what it does from there. Stock number 2 is AMC. This one collapsed today. Not too bad of a day, but it did go down 8%, down over $4. And we can clearly see we got rejected at $53, 52, 53. That was support in the middle of June throughout the beginning of July. You guys can see that. And I mentioned to you guys, look, if we fail at 52, expect a pullback back to the high 40s, which now that's where we are. But if we broke out at 52, I was saying a move to 60 would be next. That would be the next gap to fill. And obviously we failed at 52, 53. Now we're selling off, down to 47. And this is an interesting spot, considering 47, 48 was resistance in the end of August throughout the beginning of September, and it's also right by that 50 moving average on the 4-hour chart. So I'm going to put my alert for AMC at $48 per share. If we start seeing buying pressure back over that point, maybe we get to 52, 53 again. I think that is definitely possible. Netflix is another one that I'm looking at that's pretty beaten down right now. And if you all remember, I mentioned this in the video, I think a week or two ago. I was talking to a Patreon member about Netflix when it was at 600, I think a little bit above 600, and I told him, hey, it's overbought. It's going to pull back eventually, in my opinion, of course. I'm not a god. I'm not a genius at that either. And you know, don't let anyone tell you they are geniuses and they know everything. But I had a feeling it was going to pull back. You know, it was way overbought. It went from 520 to 620 in the matter of a month, which is crazy. And I was proven right. We went from 620, now we're at 570. We've seen a nice 6% haircut, and we're trading under that 50 moving average. And I think there could be downside to about maybe 560, maybe down to about 540, 545, right around that 180 moving average on this 4-hour chart. So there are a ton of gaps to the downside on Netflix. And if we start seeing, well, we have been seeing weakness. If we see more weakness in these markets, we might be going to that lower mid $500 level, which I believe that is where we could start seeing buyers stepping in. So keep your eyes out on Netflix. I personally don't think it's a buy quite yet, but give it another 10, 20 bucks to the downside, then I would think it's worth nibbling a little bit. Let's put it that way. And Golden Nugget Online Gaming, which is one that I used to own, my average was about 12 bucks. I sold out at like 18 something, so I made 50% on my money. This one, it went a lot higher from where I sold out, and that's the reality of the stock market, guys. It's impossible, literally impossible, to time the top and time the bottom every single trade. Sure, there have been a handful of trades, a decent amount of trades where I have done that, and I'm sure you've done that as well, but the majority of the trades out there and the investments you make, you're not timing the bottom right. You're not timing the top right. And this is a perfect example. You know, I sold out that day that we saw a big pop when we had DraftKings buy out Golden Nugget Online Gaming in an all-stock deal. And it went up another, let's see here. If I held on to that, I would have made another 20%. Granted, that's if I would have sold at $23, which, again, timing the top's pretty impossible. I mean, you can do it sometimes. I've done it before, but more often than not, you're not doing that. But anyway, enough of me thinking of what I could have made, because I made 50%. I can't complain, and that's under a year, guys, holding Golden Nugget Online Gaming. And at this point in time, we had a clear rejection at 23 bucks. Now we're down to the low 21s. We've pulled back a good 8-10%, and I think this could be a dip buy as a trade, that is, if we start holding 20 bucks, right? 20 bucks was the high from the middle of August, also from back in the beginning of February. So if we fill that gap down a little bit more, fall a little bit more, maybe we get buyers from 20 to push it back to 23, which could be a nice trading opportunity. But listen to this. The second we break 20 and we go back into the teens, that is not going to be good for the Bulls. Very good for the Bears, though. And at that point, I'm thinking 17, 18 is likely, which is right by that 180 SMA on this 4-hour chart. So what else do we have here? Melli, Mercado Libre. I like this one as well. We actually called this out after they reported earnings, and this is one of the stocks that we called out on this channel, and we didn't trade it. That's the thing. When you run a YouTube channel, I've mentioned this before, it is dang impossible to catch every single trade or stock that you call out. It's just, it's the name of the game. I mean, it's impossible. Even if you don't run a YouTube channel, you can't catch every stock that you see, and Mercado Libre is one of them that I missed, right? And now we're getting another opportunity potentially as we pulled back from almost 2,000 bucks a share. Now we're in the mid 1800s. We're down a good 6-7% from that peak. And if you guys notice, we're holding the uptrend. We're holding above that 50 moving average at a higher low. And granted, if we do dump under this, we start breaking under 1800, 1700, we're probably going to go to 1650, 1700 flat, which is right by that 180 SMA. But either way, this dip, I'm looking at it very closely. If we anywhere from 1750 to 1650, 1700 flat, I think that could be a pickup for Mercado Libre. AMD is another one that I'm keeping my eyes on here. We had a pretty good day, up almost 1%, despite the markets getting slaughtered. And I'm seeing a lot of support at the bottom of this wedge, and now we're trying to fight back up on this 180-day 4-hour chart, back up above the moving averages, that is. So I'm going to set my alert at, let's say, it's a tough one here, guys. I'd probably put it at 107.50 for now, and we'll see what happens tomorrow with the overall markets. I'll put it right in the middle, and this kind of looks like, I put it right in the middle of the wedge there. This kind of looks like a bull flag as well. I mean, it's in a tough spot. So watch out for AMD. J&J is the last one for today, guys, which we did call out at the bottom of this channel, I believe, last week at 168, and I'm glad I didn't take that trade, considering we're down another $3-4 from when we initially called it out. But at some point, and if I redraw this here, at some point, J&J is going to reverse. It's going to reverse hard, and we're going to start seeing a move back up. At this point, it's just very oversold. So look at this. If I redraw it with my channel tool, are we going to get a good channel here? Nope. Let me try one more time. Let's see here, guys. Look at that. If I redraw it, we're technically still at the bottom of the channel. So we've had, how many red days in a row for J&J? This one's way worse than the markets. Let's pull up that 20-day chart. Look at this. Other than this 1, 2, 3 day period where we saw a spike up, that was in the beginning of September. Other than that, we've had literally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 red days for J&J out, other than those 3 that we saw in the beginning of the September, which were green days. So 15 out of the last 18 days for J&J have been red. That is insanity. So yeah, I think it's going to reverse eventually. If I knew when, I would love to know. I mean, I have no idea when it's going to happen, but we're going to be watching it. So that's pretty much it, guys. FCell, AMC, Netflix, GNOG, Melly, AMD, J&J. That is what we talked about today. If you guys enjoyed this video, you know what to do. Hit the like button, subscribe, drop me a comment, let me know your thoughts, and check out my Patreon. Again, if you guys want all my real-time buys, sells, call-outs, morning update videos every trading day, and private Discord access, that is all on Patreon, link down below, or you guys can go to StasSurfS.com/Patreon. That's StasSurfS.com/Patreon. Make sure to get your $30 from M1 Finance as well, and your 2 stocks from Webull. Those are linked down below. And before you go, check out my video here. I made a video earlier today going over 3 stocks plus a bonus one that we didn't cover in this video. So go watch that video. A ton of value there. I'll catch you there. Thanks for watching. Again, as always, keep crushing the markets. Stay safe out there, guys. Peace out.